Good morning, everyone, and welcome to the Money Control live stream. You're watching another edition of Markets with Santo and CJ. Well, India's largest civil aviation company came out with its Q1 numbers yesterday, and I think there were a lot to take away from that, Santo, right?
Well, yes, CJ, and I'll start with my favorite indicator, which is always the stock price. There's been a lot of negatives around the aviation sector, more bad news than good news, and mainly because oil prices were climbing steadily. But despite that, you saw that InterGlobe Aviation stock continued to steadily inch higher. So that itself showed that the market was looking beyond the current problems that the sector in general was facing. And what a set of numbers. Now, at the net level, the losses continue. However, if you look at the top line, there are plenty of positives. The most important part, according to the company, is that yields have improved almost 50% to about 5.24 rupees per kilometers. Beside that, the volume of international traffic. Now, there are just 4 destinations that they are still not flying to, which they were pre-COVID, and now they are not. But other than that, the international volumes are now almost at pre-COVID levels. And also, IndiGo has, InterGlobe Aviation has said that it is managing to wrest traffic from railways even on shorter routes. So things definitely are looking up for the sector, I would say, CJ.
Yeah, Santo, I think probably if you look at the top line, of course, if you look at the year-on-year comparison, it seems like it was a brilliant earnings despite the second consecutive quarter of net losses that the company has reported. But the reason why they have reported that net loss is because of the cost equation, and we cannot let go of the cost equation given the fact that fuel accounts for almost 40% of InterGlobe's cost dynamics, and clearly the high fuel cost has taken a toll on the company's earnings. Overall, if you look at the performance, I mean, the reason why we have seen a little muted performance on the operating level is because of higher fuel costs, and that is something that is not going to go away very soon for the company. One thing that stood out for me, Santo, is the fact that their debt levels have actually increased at a more rapid pace than the cash level, and clearly I think although InterGlobe's cash position probably is the best among all the airliners that are still there, but still it is a little concerning that the company is taking on more and more debt on its book on a quarter-on-quarter basis. So that is something to really watch out for. But I think Q1 probably would be the last quarter, I think, Santo, where we will see that tailwind of pent-up demand, of traveling and everything. From here on, the situation is going to be normal, but for the industry, the situation may not be normal because you now have new players coming into the market. You have Akasa Air already becoming operational this quarter. Very soon you will have Jet Airways also coming back. So I think the competitive dynamic of the industry is going to get very, very tight going ahead. And I think that could put more pressure on the margin side, which has of course been the main issue given the high cost that the company is facing. So for me, I think that is something to watch out for, and probably you could see the stock price also reflect from here on. And lastly, on demand, Santo, I think June quarter, as I said, probably would be the best because let's not forget that airline ticket costs are almost up 60 to 70% from 6 months ago. It's already starting to have an impact on demand. You had a lot of brokerages also talking about the fact that high ticket prices are already taking a toll on demand given the inflationary times that we are living in currently. So clearly for me, I think, Santo, the best of the story has already been had, and from here on is going to be a struggle for India.
Well, that point about competition which you mentioned is fair, but at the same time, CJ, whenever competition increases, you found that some of the weaker players then tend to fall out. It's never that all of them continue to say. You've been seeing that for almost a decade now, and the stronger player somehow tend to emerge even better once there is a shakeout. Probably we could be heading for a shakeout, and let's not forget, IndiGo has managed to hold its own despite the fact that competition in the Indian airspace has been quite strong for almost a decade now. The one player goes out, someone else steps in to take that place. So let's see, I think the price action clearly at this point indicates that market is looking beyond the short-term problems, and also the company has said that corporate travel now is back in a big way. Vacation travel too has picked up quite significantly. Yes, prices, airfares are much expensive than what they are, but if the company is able to improve its yields, then I think probably the impact on its numbers would be lesser.
Well, Santo, I think I have to disagree on the competition part, because let's not forget that this is no longer an industry which was a 5, 6, 7 player industry, right? We already had a lot of consolidation in the wake of the the fall down of Jet Airways almost 3-4 years ago, right? Now it seems like again we are going to get into a situation where there are going to be 4 or 5 players, but all of them are quite big. Maybe you could argue that maybe apart from Akasa Air, which is a newbie, everybody else is going to have a decent fleet size, a decent, operational size. You have Air India already consolidating itself within the Tata Group. So you have that happening at one side. You have Jet Airways coming back probably with most of its fleet once it gets going. And then you have SpiceJet. SpiceJet could be probably the only candidate that could fall by the wayside, but it seems like there are rumblings that probably they might get some investors on board, probably improve their cash position going ahead. So for me, I don't think the competition dynamic is going to change very soon. It probably would be another 3-4 years before you see that, if a pricing war were to be triggered going ahead, maybe then 3 to 4 year down the line you could see somebody falling by the wayside. But the next 3 to 4 years are going to be very, very interesting for the aviation sector. That said, let's quickly move on to the trade setup for today before we look at the other stocks that are on our radar. If you look at the Nifty futures or SGX, they're clearly indicating a very, very happy start for the last week. On the back of very, very strong cues from Wall Street overnight, you had the S&P, Nasdaq, Dow Jones surging quite rapidly, led by technology stocks in general, mega cap technology stocks. So that is quite a good news. Apart from that, oil prices also softened overnight, of course, on the back of reports that Saudi Arabia could be warming up to the idea of increasing output going ahead. So that is something maybe Biden's visit to Saudi Arabia might actually pay off, and we might see a bit of a capacity enhancement in the oil space, and that could probably help keep oil prices, maybe lead it lower than $90 per barrel, which is what a lot of people comfort zone is at this point of time. So let's see how that dynamic, develops going ahead.
Well, the interesting part about this whole rally is that if you speak to most people, market players, they will say that they are cautious. They are still not convinced that this rally has legs, and partly that is born from the low volumes. That despite the strong near 2000, almost more than 2000 point rally in the Nifty since its June lows, you're seeing that retail participation, retail volumes have not picked up in a big way. The big change though is renewed interest from FPIs, but other than that, I think it's still most people prefer to wait on the sidelines, saying that this is more of a bear market rally. And most of the negative news probably at this point in time, be it rising interest rates, probably earnings not being as buoyant as they were till a couple of quarters back, all those seem to be discounted by the market at this point. So which means that for the market to go down, it will need something that maybe something which is not
bad news is very difficult to come by at this point of time. And in fact, it seems like there's only good news. If you look at the the US services data that came out overnight, Santo, that too was actually above expectation than what market was looking at. So clearly, the US economy is also not showing any signs of slowdown, which means that the Fed could continue on the path that it is, and Fed's probably notion that the economy is strong enough to take the rate hikes, I think maybe it'll be proven or stand corrected at the end against market's fears of a recession.
Well, that said, let's quickly move into the stocks on our watch list this morning, starting with Hindalco. Good set of earnings there, and overall sentiment for the stock has changed over the last few weeks after falling to about, the correction was pretty steep all the way from 500 plus levels to around 317 levels. It's quite a steep fall, and since then market has kind of trying to change its view on the stock, probably that the correction may have been overdone, and the first quarter numbers clearly shows that. Couple of important things here. One is that the play is more on Novelis performance, which it has delivered, and Novelis has also raised its margin guidance to about $525 per ton against $500 per ton. The other worry for the market as far as Hindalco goes has been the capex guidance, which now they have moved the guidance to the lower end of the band. So that is also probably to some extent should allay concerns. The stock has already come back in a big way, and I think this outperformance could continue.
Well, Santo, I think of course Novelis's performance has been quite stellar in the June quarter, but I think probably when the India business earnings come out, I think the aluminium business there could probably offset some of the positives that we are seeing from Novelis. Let's not forget that at home, aluminium prices and overall metal prices in general have taken a beating ever since the government had stepped in to probably make sure that prices do not get out of hand back in May. So clearly that impact is going to be felt a little bit in the first quarter, but you would expect majority of that impact to actually come through in the second quarter. And I think that is why pricing momentum in the second quarter, especially in the domestic business, is something to watch out for. Also, demand at home has also not been that great. Yes, you could see some good demand, a good amount of demand coming from the automobile sector, but one from the construction sector has not been probably that great so far. And given that Q2 is anyway generally a seasonally weak quarter for the construction sector, so you could see probably, you know, the lethargy or the lacklusterness in the domestic business probably continue till Q2, and that is why I don't expect a very sharp breakout in the stock going ahead. Maybe from September or October onwards, when we probably have a clearer picture of what is happening in China, which could be a very critical thing for Hindalco in terms of export demand going ahead, I think we could see a revival in interest in the stock. But at this point of time, it seems that appetite for metal stocks in general and maybe Hindalco in specific seems a little low. Well, last stock on my radar is from the housing finance space. This is Avas Financiers. Company came out with a very strong set of numbers for the June quarter, and it has been doing so for the quarter after quarter over the past one and a half, 2 years now. Clearly, there is a lot to like about this company. Very strong loan growth, very strong asset quality. If you look at the overall affordable housing space, that is one space within the NBFC sector that has been doing quite well for many years now. If you look at some of the biggest investors, I mean, talk about Marcellus, they have Avas Financiers in their portfolio. So clearly, one sector that a lot of people are very excited about. And I think the company also has said that, it's easily able to double its loan book almost in a 3 to 3.5 year period, given the fact that their loan book is growing almost 20 to 25% CAGR every year. So, there was a question put out to the management, Santo, that why not probably bring in products that also help you get fee income. Now, their argument is that when we have a product as good as we have, why would we want to, divert our attention into anything else? And I really like that fact, that the fact that the company knows what its strongest suit is and is trying to focus there. I think going ahead, this is one company that people should be keeping their eye out on. Of course, the concern would be rapid growth, especially loan growth in the NBFC space. We have already seen bad apples in the past, but the fact is that the asset quality is very strong, and I think that should give a lot of comfort to investors out there.
But very hard to pick holes in this one, CJ. If you look at the performance over the last many quarters, it's been very consistent. Nothing spectacular. This is something like what HDFC used to be sometimes.
Absolutely.
Even now, in fact, it's very consistent performance, and that's what the market makes the market comfortable paying that kind of premium valuations for the stock. So hard to argue on that one, I think, CJ. So the next stock on our watch list is AU Small Finance Bank. The bank is coming out with a QIP, or it plans to raise about 2,000 crore.
Yeah.
The first quarter numbers were decent, CJ, good improvement in asset quality, and the stock over the last couple of weeks has made a good comeback from 550 levels. I think my only quibble at this point in time is that the QIP typically leads to an increase in the supply of shares. So while the long-term story might be good, I think in the short term, the additional supply of shares, I think roughly there would be about 3.5 to 4 crore shares. I think that may temper the up move in the stock.
I think, Santo, the fact that they're going via the QIP road actually is quite good for the company. Of course, there will be dilution in overall stake of the existing shareholders, but the fact that the QIP has already been subscribed and there was actually excess demand from institutional investors out there goes to show that there is a lot of appetite out there in the market for a company like AU Small Finance Bank. And why not? I mean, clearly last year, the past 1.5 years were not really the best time for an SFB like AU Small Finance. You had concerns about asset quality, you had concerns about loan growth. But the past 2 quarters have shown that clearly the asset quality fears have not been borne out. The company has been able to improve its asset quality quite significantly, and the loan growth is also coming back now, Santo. I think the microfinance space is one space where you are seeing a good amount of traction in loan growth, apart from, of course, the home loan space, which has been a stellar growth story for the lenders, the bigger lenders out there. So for me, I think Santo, with growth coming back and asset quality issues now in the background, I think this is a good stock to look out for.
Well, with that, the market has opened Nifty up 94.90 odd points in early trade. Very strong market breadth once again. Close to 1500 stocks are trading higher against 300 stocks that are down. Nifty Bank is up about 0.4%. The Sensex is up 0.6%. A gain of close to 340 points over the previous close. The market is on a roll, CJ.
Yes, clearly, Santo, and the broader market again, making a comeback with the Nifty mid cap higher by about 0.5% and the Nifty small cap index higher by about 0.6%, and the VIX is also weak this morning. The India VIX index is actually down about 0.4% at this point of time, which goes to show that there is some bit of covering from the bears who had probably tried to add short position in the market yesterday when the market was largely weak throughout the session, but we saw a good late rally and we ended in the positive zone. So clearly, Santo, I think the overall momentum remains quite good, and it'll be interesting to see what happens to some of the key levels. We are already heading towards 17,500 now, so not really that far, almost 1,000 points away from record high, and who knows, maybe by the end of this month we might be sitting at lifetime high territory for the Nifty. So fingers crossed.
Well, CJ, your last stock is coming up now.
Yes. I just realized that I had mentioned I was premature in my list. The last stock actually is from the consumer space and the QSR space, and that is Devyani International. Good set of numbers. If you look at the year-on-year numbers, the sequential numbers, the company, of course, has done quite well. And this is keeping in line with what the sort of numbers that we saw from Jubilant Foodworks as well. They also had a very decent quarterly show. Q1 EBITDA nearly tripled on a year-on-year basis for the company. And very hearteningly, margins actually expanded quite sharply, Santo, in the June quarter. I think a lot of this has to do with the fact that the company was able to take on price hikes and pass it on to consumers, and consumers have also not reacted adversely. It has not really affected the business in the June quarter. So clearly that is something that is going to provide tailwind for the company's margins in the coming quarters as well, because that companies will not roll back price hikes once they have taken it. So clearly something very good for the profitability front. And overall, of course, we are seeing the rise of in-house dining. We saw that with Jubilant, overall footfalls as well as in-house dining was quite strong, and at the same time delivery business is doing quite well. So I think overall the picture looks quite great for QSR space, and within that Devyani, clearly their flag is flying very high.
Of course, clearly no disputing the performance there, both by the stock as well as the company, and it's a trend that we have seen in other fast food players as well. Clearly, I think the general expectation that inflation is bad for consumer stocks, that's now been proved wrong, at least as far as the QSRs go.
Or maybe just we are too addicted to our fast food, Santo.
I think yes, it's cultural factors, I think, CJ, which is driving the trends at this point in time.
I mean, you're going out shopping, you're going out traveling, of course you're going to, have some fast food. You're not going to bring your home cooked food, right? That is probably not
to mention the kids who keep pestering
exactly.
for it and parents having to give in to that. Well,
exactly.
With that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed watching it, and do share your comments in the feedback section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a brilliant trading session.